Welcome to the Deep End by On Deck, a podcast where visionary builders, creators, and experts discuss world-changing ideas. I'm your host, Marshall Kosloff. Let's dive in. With the Deep End, we're creating a space where we skip the surface level and go in-depth into ideas that matter. I'll be your guide as we explore possible futures of commerce, higher education, art, governance, longevity, and more, with some of the most exciting figures in their respective fields. Joining me in the Deep End is Jarrod Dicker, investor at the Chernin Group and former Washington Post executive. In recent episodes of the Deep End, we spoke with Joe Albanese, CEO of Stir, and Sagar Enjeti, co-host of Breaking Points. With Joe, we discussed the new tools being built to enable creators to reach their full potential. With Sagar, we explored what it's like to use those tools to build massively successful independent businesses as a creator. Our conversation with Jarrod rounds out this trilogy. Today, we dive deep into how modern creators are driving the development of new applications and ushering us into a new era, the decentralized web, also referred to as Web3. There are few people better qualified to discuss the idea of Web3 than Jarrod Dicker. From making angel investments in cutting-edge, creator-focused companies like Stir and Mirror to developing new media business models as the VP of Commercial at the Washington Post. He has a rare degree of insight on the creator economy, drawing from his experience in both legacy institutions and new media. Earlier this month, Jarrod was announced as a new investment partner at the Chernin Group, a firm whose portfolio includes Dapper Labs, Barstool Sports, The Athletic, and many more in the crypto and media industries. Today, he shares his thoughts on the shifts we're seeing with Web3 that will change the way we create and consume content. Two announcements for fans of the Deep End before we dive in. First, we just launched a Substack where we'll be sharing notes from our episodes, links to further reading, and other announcements. The URL is thedeepend.substack.com. We'll also link to it in the show notes. Second, we're doing our next live podcast recording on July 12th, this time with Packy McCormick, an ODF2 fellow and writer of the popular newsletter Not Boring. If you want to attend the recording, you can request an invite via the Deep End Substack. The Deep End is produced by On Deck, where top talent goes to accelerate their ideas and careers. We hope that those who listen to the ideas on the show are inspired to build. To learn more about On Deck's programs, visit beyonddeck.com. For show notes and additional resources related to the Deep End, check out ideas.beyonddeck.com. All right, let's dive in. Jarrod Dicker, welcome to the Deep End.
Awesome. Thanks for having me, Marshall.
Last time I spoke with you, you were an executive at the Washington Post, and now you're at the Chernin Group. It'd be great to start this off by you describing what your new role is, what you're focusing on, and how that new role and focus area relates back to the work you're doing at the Post.
Absolutely. So I recently left the Washington Post, and as we discussed in prior conversations, I absolutely love that institution. I read at the Washington Post. I first was there, built out their R&D team, focused on a lot of new business ventures and opportunities, left and went into crypto, ended up going back to really scale their commercial efforts, like what the future subscription business looks like, what the advertising business looks like, what a media company looks like as a software as a service brand, and a lot more adventures there. And the Post was amazingly equipped to enable myself and my team and others to really be able to experiment without boundaries. I always say, people are always like, how did you do this at a newspaper company? And what I say is, I was able to do this because it was a newspaper company, because they've accrued such kind of like dedication from readership and have built such a great reputation over 100+ years of its existence. Being able to build off of cred like that kind of really gives you an opportunity to go in a variety of directions, because trust is basically foundational. So loved all the work I did there. Over, I'd say, the past year, I mean, I keep saying 6 months, but COVID really accelerated time. Over the past year, I really started thinking about what would be next. I became very obsessed with the business of individuals, right? Whether you want to call it the passion economy or the creator economy, but it was something I'd say over the past 4 years has piqued my interest. This idea of enabling individuals to build their own businesses, what that means for existing institutions like media companies or brands, what it means for existing business models, and whether there's an opportunity in this new environment to actually revolutionize, right, the way we build businesses, the way we make money, the way individuals are able to obtain opportunity outside of kind of the confines of their existing organizational structures. And I wrote a lot about it. I spent a lot of time writing last year, mainly around kind of the creator economy, around the business of the individual, what unique opportunities could be made or done by looking at things through that lens. I'd say about 4 or 5 months ago, I was an early investor in a company called Mirror, which is just a fascinating publishing platform. It's a platform where I'm going to oversimplify it, but we may get into it later. But it's basically a publishing platform like a Medium or a Substack or any way to publish on the web, but really kind of shows the unlock of what Web3 tooling could do, whether that's how you fund your publication or your creative work through crowdfunding, or whether you want to kind of dictate ownership, or whether you want to like offering social tokens or, you know, other means to community members or co-creators, to how you split revenue. And I created a blog on that platform called Darkstar, and really started taking the creative thinking to the more crypto lens. Again, I'm a former CEO of a crypto company called Poet. I've always been deeply involved in the space, both from a user point of view, an investor point of view, but it's always been something I've been deeply, deeply, deeply passionate about. And I really started to think about what it looks like when we accelerate past the creator economy, when we really think about the creator economy kind of being on the fringe of Web 2 and really kind of pushing the limits as to how things have been constructed to date. Well, Web 3 and crypto and blockchains and infrastructure in that realm really starts to push us into this new territory. And I saw crypto and the technologies and communities that are being developed there as kind of the next frontier. So started writing about that. Started becoming even more obsessed with the opportunities that were happening there, both the builders and the talent that was moving there, the on-ramps that were being built for consumers to start to show people who otherwise had no interest or exposure to crypto, what that technology and tooling could really do. And I was very lucky to meet the Chernin Group team. I'm sure many listeners of your podcast know the Chernin Group very well. They have an amazing reputation in the private equity venture capital space as it relates to investing in the consumer, whether that's in media, tech, education, but very thematic and deeply conviction-based firm that has revolutionized a lot of the industries in partnership with founders and companies, you know, that we live in today. And it seemed like a very natural progression when we think about Web3 as this ultimate opportunity. And when we think about the infrastructure that's been laid out for it thus far, consumerization follows soon after. And, you know, there's maybe one major consumer product that's come out of Web3 so far, and that's Coinbase. So there's trillions of dollars of value. If you look at Web 1 and Web 2 consumer type products, that's waiting to be unlocked. And I again have deeply enjoyed working in this space. I've enjoyed angel investing in this space, and I really wanted to take that opportunity full time and work with a firm that I absolutely believe in and love partnering with. And so now I'm here. I'm focusing on Web3. Blockchain, a bunch of new technology and new creator tool applications that we're going to be focusing on partnering and investing in over the next decades.
Let's take a quick step back and get definitions. What What is Web 2? What is Web 3? Especially given the fact that, as you pointed out, Coinbase is probably the main application so far as Web 3 that people would have heard of. So let's just define those terms real quick.
Yeah. So some people say this gets too in the weeds, but I think it's a very simple definition. I think Web 2 was very applications first, individuals, users second. Like there was a heavy focus on being able to build platforms and environments that would attract individuals, and businesses were really built around those applications or platforms, whether that's a Facebook or a Twitter or Snapchat or Robinhood. There was a deep emphasis on being able to get these platforms stood up, bring a lot of value to consumers, creators, or customers, or any term to associate with the relevant user base. And then kind of the individuals really came afterwards. Like they became users of the product. Some of them built businesses on those products like Instagram and, YouTube was, massive, probably the leader in the career, definitely the leader in the creator economy. But that was really the mindset that the platforms were really where the business resided. That's where the innovation really was. And then users, kind of adapted and innovated within the structures of that environment. Web3 is the inverse. Web3 is really taking an individual first approach to the development happening on the web and on chain, with applications being built afterwards to really start to accommodate the needs and the unique opportunities that are happening on an individual level. And some examples to think about that, right, is crypto individuals wanting to invest 24/7 around the clock, right, early on Bitcoin and Ethereum, and now, tons of other tokens and protocols. And Coinbase is an application that, was built to enable those individuals to be able to have 24/7 markets on investing. We're now seeing that happen, across a broad range of consumer interests, right? There's a lot of talk around NFTs, especially NFTs in the art and creator space, really focused on this idea that creators should get more value out of their work. They should have the opportunity to not just be able to put their work out there and monetize it, but be able to benefit on secondary sales as well, whether you're a musician or, an artist or whatever you are. When you put creative works out there, usually in a Web 2 platform, it could be purchased, it could be exchanged, but after that initial kind of interaction, it's usually off to the races, oftentimes, misused or abused.
You gave an example in a piece about a Taylor Swift ticket that gets scalped as
exactly.
a way of thinking about it.
Exactly. Like a great way to think about, a great way to use an example around like the entertainment or ticketing industry is if, Taylor Swift sells out a 20,000 person arena in Nashville, the whole secondary exchange, Taylor Swift gets no value out of that exchange. If tickets are being sold on StubHub or they're being traded elsewhere, the artist sees no benefit or value from that, even though, the artist is the reason why people are going to the show, people are buying this ticket. And in the Web3 environment where blockchain is used and platforms are being built around that, the notion is that I can sell something and I should even encourage the resale of this because I will see value out of that. And you're seeing that a lot in the NFT art market and around like CryptoPunks and Bored Ape Yacht Club and any of the many that are popping up. People are buying, first editions or second editions. And then when they resell this, the original artist or creator gets, 10% or 20% of the royalties. And that's all programmably done through blockchain. So there's a lot of like efficiency through those benefits. There's a lot of creator benefit tied to that. But again, to really kind of try to simplify it, you could think of Web 2 as applications first, individual second. And in Web3, the idea is what do the individuals need first? And then how do we build the applications in order to accommodate that?
Something I'm curious about, and let's keep playing with the Taylor Swift example, is how could a Web3 mentality applied to the ticketing space lead to a better experience for everybody? So everyone inherently just gets, hey, Taylor Swift wants to get a part of all the action that she's involved in. It's totally fair. It's totally reasonable. But as we are telling the story, that doesn't necessarily lead to a better show, or it doesn't necessarily lead to a better experience for people. So how are ways that you are thinking, or interesting people you're invested are thinking of, actually using that Web3 experience, not just to get more money to a creator, but actually enhancing the art or the experience itself?
Yeah, so the sentiment behind really what it means, I mean, the example, that we gave was an artist can put something out there and financially benefit through, the many layers of transactions that may come after them selling merchandise or a ticket. But when you really break it down, what that means simply is that the relationship between the artist and the fan is way tighter, right? There's less like middle layers. There's less kind of interruptions between that exchange. So it means when you're tightening that relationship, there's a lot of things that could be done that make that a lot more personal, right? So you can imagine every single relationship, every single ticket holder now sees benefits of being in a fan club as well, whether that's if I buy a Taylor Swift ticket, I get a limited edition NFT, or I get access because it could be proven that I am the holder of this to go behind the scenes or to get early admission to something new. But it's a very kind of seamless way to better tighten that relationship between the creator and the fan. There's a lot of things that can be done on top of that as well, which I think become very, very interesting. And that is if you start to be able to better understand who your super fans are, how can you better enable them and build things for them? I think when the construct and the functions of the business and the platforms that are being used aren't focused on that, then it's very simple for an artist to just think about their role in the relationship as putting out records or putting on a show and maybe meeting fans afterwards. And it's a very finite moment, right? It's whenever the concert happens, you do a pre event. After the concert, maybe you meet with some super fans and then you go on, and kind of the next real fan experience that's going to exist between fan and creator is going to happen at the next show or going to happen at the next in-person event. And in a similar way that we saw, like Coinbase or mainly Bitcoin and Ethereum really changed the way that we think about the trading relationship, where it's no longer when the market's open and closed, but it's 24/7, Sunday to Sunday, every single week. The same could be thought of relationships that are going to be cultivated between creators and their fans. It's no longer just what happens before and after a show in a live event. It can now carry, because you being a ticket holder, you being a fan, now becomes a way closer affiliation to your identity. There's ways that artists can think about experiences that they build that are only for these fan holders, and there's things that can happen without the confines of physical spaces or physical time. So that's where I think the biggest benefits that we'll see, because again, we're so early. Mm-hmm. And I remember saying this on podcast 3 years ago when I was at Poet, but we are still so early. But what's going to be the most fascinating, I think, developments that will happen in relation to the creators is that creators will start to change the way that they create, change the way that they think about engaging with fans, change the way that they think about offering more value, right? Or even inviting fans in closer to certain experiences, because these platforms and this new value exchange is going to open up all these new opportunities. That's going to change the way that they're even thinking about the creative process.
I'm glad you just went there, because I want to take a quick step back and go a little more towards your early days in music journalism. Because I'm realizing, as I'm saying, well, what's the unique thing you're going to offer for fans or experiences? That's up to artists to figure out. Like, that's why I'm not a creative type. I'm a podcaster. So there's going to be an artist who can look at this technology, can look at these different assumptions, and can do something really innovative. So I'm thinking of when music videos become big in the 80s, or when you go from the album to a single Apple iTunes download, to where today TikTok is a huge thing that drives everything. So what skill sets are going to be developed by creators that are going to really fit really well into this? As in assumptions that may have made sense in the 2000s or 2010s that aren't going to make as much sense in the Web3 scenario?
It's actually an interesting question, and something that I've been having a lot of conversations around, because you look at the evolution of hip hop artists and how ahead of the curve that genre is when it comes to like not just the music they create, but also how they distribute it, how they release it, other endeavors that they build on top of that, whether that is kind of like art or other sorts of investments. And you see like the rock and roll genre really fell behind there. Like rock and roll genre was really always stuck in the past, always frustrated by emerging technologies and changes, whether that was Napster or things around secondary markets, ticket sales. But even today, like you'll see, like there really are no rock records that just really get dropped, right? There's 6 months of promotion. They're kind of slowly releasing singles and tracks, and then the album comes out. And it's this assumption of behavior that presumes that consumers and fans still want to engage and listen the way that they did, 10, 20 years ago, which just isn't the case. And I think in hip hop, you've really seen that completely change. You see a lot of artists like dropping albums. You see a lot of artists thinking about business opportunities outside of the music itself and looking at music as a vehicle. More, like the most recent to like look at a crypto example is like Jay-Z, doing things via NFT around Reasonable Doubt. But there's this idea that as these new technologies and platforms really start to emerge, the creative process should change because there's a lot of value in that and there's a lot of consumer interest there. And I think on a genre by genre basis, you haven't really seen that adopted in a way that has been beneficial for, the rock industry versus, let's say, the hip hop industry. And I think it hurts themselves. So I'd say there's it's not necessarily a threat by any means. Like I think what's beautiful about the rhetoric around Web3, again, disclaimer early, so we'll see kind of how it all plays out. But what's beautiful about it is like it really is taking into account the individual first, the relationship with fans, really understanding how you could put more value and money in the artist's pocket, how you could put more value in the consumer's hands when it comes to these sort of relationships, and things are being built around that with the goal of just trying to remove as much friction or middle layers that otherwise may have been taking a cut or may have been changing that experience. So ones that are embracing this, I think we'll see tremendous benefit. And I think we're already seeing that. And we're already seeing a lot of excitement around that. That doesn't necessarily feel too inauthentic. I think when a lot of emerging technologies and trends hit, it's very easy for companies to seem very like inauthentic or artists to seem inauthentic by jumping on it. But it does seem like such a natural evolution and a natural value for what artists and creators have been talking about for, let's say, the past decade. And I also think like it's not just going to be an evolutionary flow where, Web2 creators or functions of Web2 platforms will start to kind of evolve out of what they do and go into Web3. I think it's going to be very complementary. I think there's going to be some massive unlocks that'll come out of Web3 development. The example that we keep hitting on is secondary markets, programmable royalties. That's something that is not frictionless right now in the current ecosystem. And, that's something that I think many artists, many creators, others that kind of work within these industries are going to jump on, because why not? If you could build more efficiency there and build more value there and spend attention somewhere else, then that's a massive efficiency play and a value unlock. But I don't think it necessarily has to be competitive. I think we look at the amount of internet users to see adoption, and we see the amount of wallet users on crypto to see adoption, and we'll keep comparing Web3 and Web2. But I think what we'll actually see is a lot of new platforms that are very kind of Web3 focused begin to emerge. A lot of Web2 platforms really start to acknowledge and see value in some of the Web3 feature unlocks and start to kind of adopt them or introduce them to their user bases. But I think it's a very natural flow. And even on an infrastructure layer, right? You could say we went from servers to cloud computing to now blockchain infrastructure. On the consumer layer, we'll see a similar approach where it'll just be a very natural evolution to be able to see new value, adopting things that work, and then kind of edging into a new frontier.
And this is a question which goes directly into your background at the Washington Post. How do you see legacy institutions responding to the possibilities here? A piece that we'll include in the show notes that was really useful for my thinking on these issues was your piece about media companies becoming more like record labels as the individual talent, the individual creator becomes more centric to the project. But how do you see legacy institutions responding? Because even when you were saying a tiny bit ago, middlemen, friction, in so many ways, the bad version of a institution is just purely serving as a middleman that will be ditched eventually. So how do you think they're responding that way?
Yeah, I mean, I'd say like the biggest kind of, I guess, recalibration for media companies probably came from conversations around Substack and individuals being able to get kind of like advances or the ability to be able to kind of go off and leverage their audience on their own. I think while a massive disruption and an exciting disruption of enabling kind of individuals to be able to kind of go out on their own and build on their own, I think what I wrote in that thesis kind of stands true, and I'm happy to see that. Like I think the value of media companies is very clear, and I think there just really hasn't been a light shown on the deeper values of what media companies really bring to the table when it comes to individual creators, right? And in media companies as record labels, the kind of thesis was that media companies are very important. They're here to stay. They're durable. There's an association with the consumer or the fan, and a lot of their affinity is with the brand itself, especially around news. But media companies really haven't done a good job advertising that value to their employees and their individual creators in a meaningful way. And what I basically mean by that is, traditionally media companies would be a place that creators could go, build their own reputation, but everything was really being built behind the brand. So you as a designer or a writer or an editor, or even someone who's working on the business side, is really going there in order to stand up the brand, and everything is done for the brand, and all of the work is done for the brand. And, you are paid to do that job, right? And that's kind of the relationship there. And what I think has changed a bit for the better is that there's been a free agency of talent, and kind of a recognition that, some talent should have different sorts of relationships or different sorts of deals or bring different sorts of value versus other talent. And I think you saw that with Substack, right? Like Substack is able to look at, writers that have massive followings on Twitter or may have massive followings in their publication, and know that that is, a perfect market to be able to recruit and bring over, because they will bring their audience and they could structure around them. On the inverse, media companies are basically talent creators, right? Like they could bring in Jarrod Dicker, who may not have any followers or may not have written a byline a day in his life. And now all of a sudden, when you're being distributed and featured in prominent places, you start to build that audience, you start to build that voice, and you're
with trust. To go back to your earlier point, because
right,
with a trusted brand, that's the key. It's the stamp that will
exactly
matter there.
Exactly. So I think media companies are really starting to kind of think that way. I think Vox has been a great example of this. Like Vox has brought a lot of talent back to the Vox Media Network. And I think like the notion is that, they support, distribute, value creators. Creators could come and build there. Again, I don't have any insight into the economic relationships, but you'd imagine some media companies really starting to think about what upside could look like. There's some new media companies that are starting to come out that are incentivizing their writers by saying, if you drive in X amount of subscriptions over this threshold, you get X amount of revenue. So that's not necessarily new, but it's never been so openly discussed the way that it is now, where creators should see value in upside and should be incentivized to engage audience and build that business. So I think like that kind of is the media structure of the future. Brands do build trust, to your point. They bring a lot of value to the table there. They also bring a ton of operational value, things that individual creators don't necessarily want to be kind of focusing day to day on, whether that's accounting or finance or distribution or audience development. Like there's experts that work within media companies that just live and breathe that bring that value to individual creators. And, being able to kind of put that value on the forefront, I think will attract a lot of talent, bring a lot of value back. But again, like to kind of go to where we are now, the media industry is again changing, right? The subscription business will again evolve. The advertising business will change based on, decisions that Google and other monsters in the market are really going to decide. And I think we'll continue to be having this discussion of, well, how should media companies be structured and thinking about how to, direct their future in a way that's not totally affected by a political market or, a browser change or IDFA at Apple. And I think that's, again, why I'm psyched about the rhetoric and the development around Web3, because it really is trying to say, well, how do you start to create new models or create new and deeper relationships that bring a lot more value, but give you a lot more kind of security around the relationship that you do have and whether or not this is something that could be sustainable.
How does all of this affect the platforms that really won Web 2? So the Facebooks, the YouTube. Facebook just added a podcast compatibility thing. I'll get a better explanation of that someday, but because it's a little unclear what's exactly happening there. But what does everything we're describing here mean for those Web 2 platforms?
Yeah, we just wrote an article on Darkstar, the writers and I. There's like a few of us, and I strongly consider people check it out, darkstar.mirror.xyz, actually called The Great Flood, and really talking about whether or not, like, what is the relationship between Web 2 and Web 3? Like, will it evolve? Will it compete? Will it destroy? And we called it the Great Flood because Web 2 was really the great flood of users coming in. Like with all of these platforms, anyone could be a creator, anyone could consume. Things started to become a lot more accessible, a lot more unlimited, and it really just opened up the floodgates for people to create on massive scale. And we kind of thought through like what Web3 starts to look like. And one of the big themes that came out of that is how critical the Web 2 platforms are today for the success of Web 3. I think if you look at Twitter, for example, which I think is an amazing kind of bridge and tunnel of all different creator platforms and all different phases of the internet, most of the marketing and the value drive is happening on Twitter for a lot of these kind of Web3 projects, whether that is a token sale or, trying to draw attention to a product, or whether that's founders, again, trying to like gain credibility or, distribution of their content, or even kind of going beyond and beyond, like people marketing certain projects, right? Like Twitter does seem like the vehicle for marketing, for reputation, for value on Web3 platforms right now, because that distribution layer really isn't there. And I think the question is like, does Twitter remain that? Do we look to decentralize a Twitter, and does that start to introduce an entirely different value in Web3? And I think what we found is that we believe that Web3 will be an evolution of Web2, but the Web2 platforms are still going to be critical and valuable to many different consumers. And it's yet to be known and hard to predict, but I don't think it's a situation where we evolve out of Web 2 and go to Web 3. I think both will be equally as important and bring a bunch of differentiated value. Now, what I think a big theme is, which I'm excited about, is Web 3 is really focused on on-chain. Like what you do is what you're recorded, it's immutable, and Web 2 is very more so focused on like marketing and broadcast. So when you think about the idea of like reputation, right? When you think about, Marshall or Jarrod and the people that they are, right? Like you effectively go on social or you look at bylines and you see either what they've written or what they've marketed. And it has very little to do with what we've done per se, and more, how we've been able to convey our interest in the work that we do. So the loudest person often wins on Twitter, right? Or people who are, I guess Twitter makes introverts extroverts, but basically the louder you are, the more you put out there, the more you're heard. And it's just assumed that, what you're saying is what you do. And there's an association with that. In Web3, it really starts to become a lot more interesting. And this is happening in the DeFi space, where the actions that you do are actually recorded and available to see on chain. And you could really start to see not how people market themselves, but how they actually execute and what they're doing, and really being able to build reputation on that. And that starts to become fascinating when you think about a variety of layers. I mean, one layer is when it comes to DeFi protocols and wanting to discern good actors from bad actors and really start to recruit and get engineers onto your protocol or onto your platform. You could actually see what they've committed, what they've done, the work that's been executed, and then be able to bring them in regardless of what their resume says. Even beyond, you could see when you think about reputation in Web2, a lot of it is around bylines or people that have published. But most of the smartest people that I know, they don't have time to blog. They don't have time to write. They're not on Twitter. They're not marketing themselves or broadcasting themselves 24/7. So what's interesting in Web3 reputation versus Web2 is really about your byline, your Twitter handle, your followers, what you put out there. In Web3, it could be about what you read, right? Marshall may not be someone who publishes a lot, but I know Marshall is very smart, and I want to get into his head and I want to read what he reads. So all of a sudden, on-chain reputation is not just your bylines, but also what you're consuming. And that starts to become a daily habit of consumption for me. And I start to see tremendous value, not just in you putting content out there, but in the content that you're consuming. And there's a lot of kind of new cred attributed to that. So I think that that's another angle where, as an evolution, it starts to become interesting, but you could see the nuances in what Web2 and Web3 really become, where Web2 is really, how much you could broadcast, how big you can build yourself up, and you're rewarded in doing that. And I think we could all agree on those rewards. I've had many conversations and relationship unlocks because of what I've blogged on the internet. But if Web3 starts to build reputation beyond that, where it's not just what you write or who follows you or what you tweet, but also all of these other things that can now be proven on chain. Well, that's a massive unlock for individual reputation. It really starts to influence a lot of the industries that we work in.
What I love about your last two anecdotes is that you hear Web 1, 2, 3, and your intuition may be that one's superseding the other, but they're complementary because they're serving different people through different functions. There are people who are very successful, like you said, on Web 2 who would not be successful using Web 3 assumptions and vice versa. So any opportunity to basically expand the overall plot of land that's actually really exciting. So something I'm wondering, and maybe this doesn't quite track, you wrote a bit about this, that when we're talking about the creator economy, there's the very positive, optimistic, forward-facing one, control, ownership, et cetera. But there's a lot of really terrible parts of that go to a media company's ability to explain what it's actually providing. AKA, you get vacation, there's support staff, there's editing, on and on and on and on, right? It's the obvious stuff if you've worked in media like we have that are less clear. Are there any Web3 projects, ideas, founders who are coming up with ways to address the negative downsides of the creator economy? Like you said, early days, but there just are these very clear things. We both mutually know a bunch of people who are just, hey, I've been writing an email newsletter 2 times a week for the past year, and I'm broken and I'm taking a month off, even though I know that that's going to harm my open rate, that's going to do this and that. Is there anything that you're coming through that addresses all of that, or are these separate dynamic spaces?
No, I mean, I do think I am very mindful of thinking of Web 1, Web 2, Web 3 as competitive. I think it's all complementary. I do think that there will be spillover into one another, mainly 2 and 3. And I think that there will be independents, like ones that are more 2 or more 3. But I do think that it's all complementary and based on individuals' needs, whether you're a owner or leaser, spectator, consumer, creator. But what is fascinating, to answer that question, I'll kind of use this example. And this is something that even kind of surprised me a little bit. So Mirror, the publishing platform, I blog there, and it's not equipped yet for SEO. It's not equipped yet for social. I can set it up, but it's not native to have you follow me so that you get everything I write in your inbox. But it's working. It's working more than when I wrote on Medium and when I wrote on Substack.
What do you mean by working?
Like it's getting the attention, it's getting the engagement, it's getting read by the people that I'm looking to target. And I think that there's a reach, I'll say. And I think that there's two reasons for that I think are fascinating when we think about the future of media. One is the platform itself really starts to become a club, right? I don't think we really ever had that with Web2 type publishing platforms. Like I think you wrote on Medium, but you wrote on Medium for SEO, and you write on Substack because it makes it really seamless for you to be able to send newsletters. But you don't like join them because you believe that the people writing within this platform are people that you want to be directly associated with, that you are actually reading and looking up to. And like Mira has kind of become that in a strange way. Like they do an amazing onboarding process, which is called the Write Race, where every Wednesday you have to get voted in to write on the platform. So you effectively need to get people to kind of vote you in every week in order to get access to the platform. Now they've opened that up where if you are already a writer, you can invite people in, but it has kind of become a club. And that's really fascinating too, because you start to attribute value less to just focusing on how you distribute or just how you're discovered, but now who you're associated with and who you want to be associated with and who you want to collaborate with. The other phenomenon that I think is just amazing is media has always been evolutionary. There's really never been a revolutionary change to media business models. You've had advertising, you've had subscriptions, and everything has really been an evolution of that, right? Advertising became native advertising and then has become e-commerce or whatever you want to call it, but it's all effectively the same. You're trying to, advertise a product to your audience and sell it. Same with subscriptions. Subscriptions has always been very simple. I create something, you as a reader subscribe. That's where the relationship ends, right? If you want to unsubscribe, you unsubscribe. You leave everything on the table, you go home, there's nothing lost, it's just goodbye. And in Web3 media, there are revolutionary business models that didn't exist yesterday that now exist, right? And they kind of like run the gamut in a bunch of different ways. One is the idea of crowdfunding, right? So really being able to say in a very seamless way, I am going to blog about this idea. I am going to raise money from my readers, right? And in exchange, this is what is different. They get a token, or they're effectively owners, right? Co-owners of the publication I create. So crowdfunding and Kickstarter and things of that nature have existed, especially like when you look at donations and the Guardian type model that's happening in news.
Which for non-media people, what do you mean by the Guardian example? Because it's a specific one.
So the Guardian opened up the ability for donations. So instead of readers, needing to subscribe, they opened up a donation model, and it's been highly successful.
So just mission driven. Hey, you want to have journalism, you like our vision, our point of view,
costs money,
support us.
Exactly. And that's been very successful. But what's happening now in Web3 is that you are doing a crowdfund type model, but now in exchange for that crowdfund, so creators are getting money up front, however it is that they want to raise, with a clear description of kind of what consumers are going to get by investing. They also get tokens, and these tokens are an association of ownership, and those tokens could be used to drive influence. There's a lot of kind of conversations that happen within the Web3 environments that are like, I want to be creating this, or I want to associate funds to hire an editor or to do other things within my media publication. And the community members who have invested have a vote. They have a say in kind of how the media company will evolve, the direction that it'll go in. There's share and upside. So as the publication starts to grow, that growth, whether that's coming in through advertising models or subscription models or new models, associates to the treasury. So the value of each individual's ownership begins to grow. So that has really never been such an easy, seamless thing to happen before. And that is now kind of opening up and happening. And so I feel like it's a long-winded way to answer your question about how the creator economy woes get solved with Web3. But I think when you think about business models in media being revolutionized, you can start to see how those start to affect the issues that kind of come into play. One is front loading your investment to create versus having to create and hope that you drive revenue. One is not just having a relationship with the subscriber that's like, here's content, right? And you could very easily, when I stop publishing content, just unsubscribe. Now it's not only do I publish content, but you as a subscriber are also an owner in the media publication. So you're not just incentivized to consume and engage with the content, but you're also interested in the well-being and the growth and the success of me as a media brand. So it really ties these things together in ways that has never really been seen before. And that's where I think we start to see problems being solved, new problems being created, but a ton of opportunity in the rise.
No, and what's so useful about that is if you sum up a lot of the descriptions of what the problems are for individual creators, they're loneliness, being too much of an individual in any process. I think the way that you described this in your piece on Darkstar was basically it creates the incentives for collaboration between creators and operators and investors. And that's something that just doesn't exist right now, and I'd like to just understand a little better what the ownership side of this looks like from an upside perspective. So let's say, because this is the problem of the internet, right? This is kind of what destroyed the newspaper industry. Content on the internet has no inherent value. Once, let's say I take the transcript of this episode, it's worth nothing. It basically costs nothing, all those dynamics. So can you just operationalize what ownership looks like if someone's looking at the Deep End podcast and trying to apply that idea to it?
Yeah. Yeah. So like the Deep End podcast, I mean, maybe you are looking to build an ownership structure around the Deep End podcast. And you say you want to raise, whatever it is, $400,000 to be able to fund it over the next 3 years. You would effectively open up like ownership for the Deep End itself. You would sell a fixed amount of kind of tokens and shares to like your audience or co-owners. There would be an association of what those tokens or shares bring. So it's not just, I think it's less interesting to say, hey, you can be a co-owner in the Deep End, and if the Deep End ever makes money, you can make money too. I think it's more interesting the influence that it begins to open up within the community itself. So an example that I'll use to like straight from the Deep End, but it's like, I think like an amazing example of this structure is in local news, which has totally been changed by media business models. So like traditionally, local news has been a service to the community. They report on things that are critical for that individual community to know, whether that's around government, whether that's around business, whether it's around events, calendars, the main purpose, or whether the purpose was to basically inform that community on what they need to know in order for them to live their lives. As the media business models have evolved to reward scale, that has become less and less and less of the focus of these local news organizations. They're focusing on more broader national coverage because they want to be able to garner more page views or drive more attention in order to monetize that. They want to open up their subscriber funnel, right, to be able to get more subscribers. So they may focus on things way outside of, let's say, a town, but even a county, or even more so, right? It seems a lot of local news publishers aren't national enough, but they're also not local enough. They're kind of in this purgatory phase because of what the models reward. They can't go too niche, but they also can't go too broad, and they're kind of stuck. In an ownership type model, and again, I wrote about this too on Darkstar, so I strongly encourage anyone to kind of dive deep on it, because my co-writers like Tal and John and Brian, are brilliant and go really deep in a bunch of different directions. But you can imagine, right, a community or a town that you live in start to tokenize the local kind of newspaper, and you'd kind of move away from the idea of local news to local services. And everyone in town, has a token, right, or purchases, let's say, like $1,000 worth of, the town paper. But how that really starts to change things is now the community effectively like votes who should be coming in and writing for that paper. Like you like associate delegates, you choose an editor, you choose a designer, you really decide how that treasury is used and how that should be staffed in order to fulfill the community's needs. You then could vote on different directions or topics. Like instead of the front page of the local paper, or the homepage of the local paper covering a national news event, right? They may be voted to cover, why is this 5G tower being set up in front of my front yard, and now my views are obstructed? Who's funding this? Why is this here? How does it, right? So like you really start to bring local services and value back to what the local newspaper used to do. And I think that that's effectively where ownership starts to become a lot more interesting. People want to focus on the upside, and of course there's value in the upside, and we could go deep there. But when you think about like why you would tokenize or introduce ownership to like your podcast, it would be because you'd want to get your community deeper involved. You want to give them more influence to help drive maybe the content that's being created or where the investment should go, because then you know that your customer is happy, they're engaged, they're interested, they're a part of it, and it really starts to become more of a collective than just a creator-consumer relationship.
And what's so interesting for that, because that takes us to our last bit here, is that articulation, especially the focus on the local news side, helps solve for the fact that there seem to be a million different opportunities in investing in creator businesses. There aren't quite as few opportunities to invest in individual creators themselves, especially when so many of the best creators are focused on very small niches and aren't exactly trying to build X huge business. So, if you're even if you have a decent YouTube channel, you're not a good fit for venture capital. It's unclear if there's a good model for a more straightforward investment. But if your whole thing here is that I'm really good at articulating ideas or perspectives for a specific community, that ownership model, but isn't quite focused on the financial upside, like you just said, really fits with that. So I think that's really fascinating. You could definitely see, and I want to tie the Guardian example to the local news one, because the Guardian example is so mission driven. That idea of joining the ownership community to further that mission, determine the direction, is so interesting, especially given the fact that the Guardian itself, that their whole thing is that they've expanded beyond just the UK. Like they used to be just like a progressive UK publication, but now they're like, no, like we see ourselves as basically the Economist of the center left to like the left, and finding models that could basically support that and could articulate that. It's super important. So for the last question, how should creators in the Web3 space think of funding, especially given the fact that so many of the best creators that we're seeing at this early stage are creators who probably came from a media company? So, we had my co-host Sagar on for his Breaking Point launch 3 episodes ago, and he's at 500,000 YouTube subscribers in 3 weeks. That's really great, but that's because he had a media company prop him up for 2 years, and he'll say that to you too. So what does that mean for people who are starting out, right? So for the person who's sitting in their basement and has an interesting idea, what does funding in the monetary side look like?
Yeah, I mean, like this is the most important lesson in media and creators in general, and I probably said it on this show, but I've said it to a lot of people, is like diversification is your really only revenue strategy. Like you should always be thinking about ways that you could diversify income, right? Whether that is what you're doing on the input or what you're doing on the output, right? On the output, we talk, there's arguments constantly about whether subscriptions are the future or ads are the future or events are the future. And like, it's like the meme, like, why not both? But it's like, they like it should be all, because you are going to start to see opportunities in a bunch of different avenues. There's constant innovation happening across all of these different revenue models. And you don't want to not be able to take advantage of those things because of, convictions that you've had against the model that has now changed. So the first piece of advice is no matter what web you're in, right, diversification of kind of how you think about your business is very important. And they should all be looked at as opportunities. And depending on your community or the product that you offer, one may lean heavier or like on the other, but they're all opportunities, and that's the right word for it. When it comes to funding, I think that again, like diversification is critical depending on kind of where you want to go, whether you want to bootstrap, whether you want to raise, whether you want to crowdfund. You see a bunch of amazing examples happening kind of across the board, right? What you're seeing with Substack is some writers being able to bootstrap with existing subscription revenue, some getting it advanced and then turning that advance At traditional media companies, you're getting a salary, you're able to build your own brand alongside that, but you're able to kind of be comfortable in your creative field. Again, comfortable in quotes, because many creators are definitely underpaid. Or there's things that are happening in the Web3 space where people are quite literally crowdfunding their publications. There's one, Dirt, that just released, which crowdfunded its ability to be able to kind of launch a publication. They associated it with NFTs. So people who bought were able to kind of get limited edition NFTs, but it's an entirely new way to think about funding. And I think that that's a very appropriate and critical one for a lot of creators to start thinking about, right? If you are able to get cash flow on the onset and be able to give a real value exchange to your readers, whether that's through NFTs or experiences or whatever, I think that that's an amazing avenue to start to explore, and something that consumers are very interested in and want to be a part of, right? Substack, I still believe that a lot of Substack subscribers to individual creators, deep down inside, it's not just about the content. It's about wanting that creator to continue, whether that's because they like the content or they like the message or they like that individual. So what we're saying in Web3 is, that sentiment still rings true, but now you are actually investing in them. You are not just subscribing to the content and doing it altruistically to hope that they do well. You're also doing it because you believe that they will be successful. You want them to continue and you want to be an owner in that.
That's an excellent place to leave it. Jarrod, thank you so much for joining us on The Deep End.
Thank you.
Thanks for joining us in The Deep End. If you enjoyed your stay, give us a review on Apple Podcasts and share this episode with your friends and colleagues to help grow the show with us. We've also got show notes and more episodes available at ideas.beyonddeck.com. See you next time.